the president confirming that the economy expanded 5.4% in 2010. We've seen strong full-year results and the market's still trading poorly. We've got technicals looking soft as well. What are you making of the kind of pressure the market's under right now, and why the market's looking through all the good news that's been surfacing?
Well, we have had quite a lot of externalities, and I think those have had a role to play in the lackluster performance of the market in comparison to the economy. I think the fact that in the last few months we've had the Sudanese referendum, we've had the Ugandan election, we've had a lot of bickering in terms of the coalition government, and you know, we've also had the mobile telephony industry price wars. So there is quite a lot of you know, issues that have come and hit the market from different directions, and I believe those are what have really had an effect on the market. I think another point worth noting is that we've also had the issues with inflation and with the the North African issues, which are all externalities that, once you add them all together, you can see why there has been a bit more uncertainty regarding the market.
When it comes to the good news, I mean, it's the earnings reports that have really been getting the market's attention from a local investor perspective in particular. A standout feature for you looking at the results that have so far been released?
Well, I think the results are actually very, very good. It's a good dividend year for investors, and we've seen investors actually reward those companies which have paid very well in terms of dividends. And I believe that now that we've seen the financial sector show very strong growth, we do expect that going towards the second half, the end of the first half, and of course to the end of this year, we are going to see the other sectors also pick up. Of course, we have seen some of the industrials still not doing very well, but I do believe that as the economy picks up, they're going to settle down.
We know that as the earnings have been filtering through here in South Africa, we've seen a gradual unwinding of the valuation of the overall market, bringing the PE closer down to historic averages. What kind of dynamic are we seeing when it comes to Kenya Incorporated's reports and what it's spelling for the valuation of the Nairobi bourse as a whole, especially as the market continues to drift lower?
Just come again, please.
Just looking at current valuations on the NSE itself, what do you see the corporate earnings picture spelling for valuations at this stage of the game? Are we seeing an unwinding of valuations at the local bourse?
Yeah, we have seen PE ratios come down, especially in the financial sector. We are seeing them coming towards the 10 points mark. And that is a good thing, meaning that we could see investors beginning to feel that they are relatively well priced. And I believe that especially with the blue chips, as long as we see that happening, then we could expect some more activity as investors seek to get in at such levels, and probably looking towards getting out when PEs actually go towards the 15 and 20 mark.
What's your strategy in this context, your approach to the market, Samuel? Do you have specific sectors in mind, or are you getting pretty stock specific?
Well, for example, if you look at stocks like equity, I think the results had already factored in, the price had already factored in their expected results. So I think right now we are looking for the surprises, because once we see the surprises and of course the huge dividend payouts, it gives us a quick, entry and exit point where we can just make the dividends and probably exit once the books close, and then start to look at those stocks that we feel may gain in value so that we can start seeking capital gains. But I do think that the services sector is one sector to look at, and I think also in the industrial sector, especially the petroleum distributors, which are especially Kenyan and KPLC, are stocks that have the potential to actually have significant growth as we go forward.
Samuel, let's get stock specific at this point, because you mentioned Safaricom still coming under pressure, and I'm struggling to believe that it's heightened competition still the driving force behind this downward trend on this share. Surely all of that has been priced into the share price already.
Well, I think so, but the thing is, sometimes investors will act on sentiment, and I think I don't expect the average revenue per user, especially on voice, to have that much effect, especially Safaricom having diversified the income streams. But then today we have seen that the other mobile, the competitors, Safaricom's competitors, have started trying to look at ways in which they can also get some inroads on the M-Pesa platform, or rather on the money transfer, so that they have a platform that allows transfer of money across the different networks, which will also probably, you know, have an effect on Safaricom's hold on that market. But I believe going forward in the telephony market, it's data.
Breaking through that 4 shilling mark to the downside, what have you made of that move and current valuations? As a local investor, would you be buying?
Well, as a local, I would be interested in getting in at that point. I mean, looking to, even if it went further down, I would still average down, because I believe that it should start coming back up towards the 4 shillings and 55 shilling mark going forward. But I think what we usually see with Safaricom is foreigners usually support the stock at around 4 shillings and 20 cents, which they haven't done this time, and we've seen it go below the 4 shillings mark into up to about 3 shillings.
Of course, to bear in mind is that we do have foreign investors getting swept up in negative emerging market sentiment at this stage. Very quickly, touching on Access Kenya, while we've got a company like Safaricom possibly standing in good stead and benefiting from the data side of the business, we've got a company like Access Kenya that's hitting fresh lows. We're sitting at 970. What's going to be the catalyst for a company like Access Kenya in this context?
Well, we have been quite worried about Access Kenya. I think the mobile telephone companies have entered into the ISP and data business, and I believe unless they come up with some serious innovation and some serious strategy that shows that they can actually achieve growth, then they're not in a very good standing at the moment.